The GameStop saga is back, guys. Roaring Kitty and the GameStop saga, I'm going to talk about in this video why I think it's actually dangerous for investors. I'm also going to give you some tips how to handle this if you're involved in it in any capacity, or if you're hearing from your friends that you should get involved with it. So I am a veteran trader. I'm a financial advisor, certified financial planner, author of the book, Do This With Your Money. Get the book. And I love the markets. I love everything about it. I do not shy away from people that want to be trading the markets. In fact, I coach people that want to trade the markets so that they can do it in the right way with the right amount of capital, with the right types of stocks and the right type of momentum and the right type of risk management. You get the idea. So let's start with what's going on. Well, GameStop, as most of us know, we've seen the movie, we've heard the stories, it was all over the news in 2021. There was a massive short squeeze. And ever since then, the price has just been ticking downward and kind of dying, for lack of a better word. And then all of a sudden, it's been dying for a few years. And then all of a sudden, recently, we've seen this pop in the stock. What is all of this? Well, Roaring Kitty basically came out and he was doing all of this cryptic tweeting. He's the mastermind basically behind that 2021 short squeeze, and he was putting out all of these tweets, and people were trying to decode it and figure out what the hell all of it meant. And then finally he came out and announced that he was long GME again. And that's exactly what caused this pop in the stock, is when people found out that he was long, aka he bought shares. So this pop was all of the cryptic tweeting, and then we finally found out here on this pop that he was officially in the stock again. So what's the problem? Well, the problem is, yes, there are some of the greatest investors that people try to follow. Hedge funds have to post their positions, even though they have to do it a little bit past when they've actually entered into the positions, but they have to file with the SEC their position changes in their hedge funds. Warren Buffett, people love following Warren Buffett. Whatever Warren Buffett invests in, they want to invest in. Right. So there's been an argument that, well, people follow Warren Buffett and they follow these hedge fund managers into positions. So what's wrong with following Roaring Kitty into GameStop? And I get it. People think that Roaring Kitty is an amazing trader. They think that he is a genius at this point. But the fact of the matter is, he's not. He literally orchestrated this short squeeze by gaining a following. He is able to move markets. Whether it's legal or illegal, it doesn't matter. He can move markets, obviously. And this is the crux of the issue. Now, we found out on today's live stream, he live streamed. Everybody was super jazzed about it. They thought he was going to drop some crazy news about GME that was going to make everybody want to pile in the stock. Well, I listened to the live stream. The live stream was a big fat nothing burger. He did show his position now after he was down a couple $100 million overnight because the stock spiked and then came all the way back down, gave back all the gains from yesterday. And so he showed that. And really, he didn't say much. All he said was he still likes the stock. He still thinks that the management team, he has confidence in the management team, Ryan Cohen being the CEO, the activist investor that everybody, is familiar with via Chewy and GameStop. Well, he trusts management and he thinks that the company is going to turn around and transition into something else, right? Getting out of the dying video game business and into something else. And I'm not saying that turnarounds don't happen, transitions don't happen, because they do. It's happened in the past many times. So GameStop could pull this off, but the problem is, well, the first problem is Roaring Kitty is not really a professional. There are people that follow Warren Buffett and follow these other hedge fund guys. They are in the markets. They're basing their investing decisions based off of fundamental analysis, not a feeling, as Roaring Kitty called it today, right? Well, Roaring Kitty is basing everything off of this one meme stock that has poor fundamentals, and it's not based on fundamentals. His investing decision is based on feeling. And people following Warren Buffett's and the hedge fund managers, they're going to be following somebody that is a little more skilled. They're probably not going to lose their butts on low quality stocks, but following somebody that is just using feeling and, gut feelings essentially, who doesn't really have professional experience, who probably just got lucky on that first short squeeze, it seems like he's kind of pushing greed a little bit here. And it's dangerous because people are following him blindly. Now, I can get on board with trading momentum. You have to disconnect your fundamental mindset from your technical mindset, right? You have to disconnect what the stock actually should be trading at fundamentally versus moving on just emotion and momentum alone. So you kind of have to know how to delineate between the two. So I'm not against people trying to trade these moves and take advantage of the momentum if they're skilled enough to do that. The problem is most of these people, when you look at the comments that come through this live chat replay, Diamond Hands Bro, this guy is the biggest legend of all time. Okay, Moon It. He's just got a really, really, really strong following that is going to do anything that he's doing. So, kind of back to the chart, we've seen these pops before. They've happened many, many times. And after listening to the live stream, I don't really think this time is going to be much different. I think that Keith Gill, aka Roaring Kitty, did not really have much to say. And I think the price action is reflecting that. I mean, it gave back all of the gains. During the live stream, the stock was selling off. It's because what he was saying was not compelling enough of a reason for a lot of investors to hold their positions. I think that the people that are still holding this could end up in some trouble if they don't change their mindset. So the moon boy mindset can only get you so far. And Keith Gill, he got lucky. He got lucky once, maybe twice. And the question is he going to get lucky again? He's truly putting a lot on the line right now. And he's also risking a lot of his followers getting really pissed off if this stock does not go higher. Because a lot of them, they bought in with him. I'm with you, Roaring Kitty. And they're right there. And if this doesn't work for them again, there were already people that lost a lot of money from 2021 from this sell-off, and they gave up. So if any of those people ended up piling back into this stock, hoping that it was going to go higher and it doesn't, well, they can end up very angry and very, very burned from the market. So I don't think Roaring Kitty is a bad guy, but I do think that he knows his power. The fact of the matter is he knows he can move markets. So we ended up getting GameStop's earnings release. We got it a few days early because of all this madness, and they wanted to announce a share offering. So basically, we found out that revenue at GameStop declined 29% year over year. Not good. So there's a lot of speculation after GameStop did a share offering to try to raise capital. They need cash because they're burning cash. There's speculation that they'll take that cash, they'll shut down the brick and mortar GameStop stores, and they'll do something else or move on to something else or turn into an investment company or whatever. There are these ideas that they can go in these different directions, which it sounds like that's what Roaring Kitty's kind of betting on. But the question becomes, well, what is the value of that business? That whatever that turnaround turns into, what is the value of that? And nobody knows, right? So this thing is really just kind of floating on air at this point. It's floating on hopes and dreams and speculation. So here are a few tips if you are involved in this. The first tip is don't be surprised if this does not work out. The odds are that it actually won't work out. And if it does, everybody is getting very, very lucky. So just always think about what could go wrong more than what could go right, and you'll be prepared to handle that risk. What a lot of people don't do is they only think about what could go right. They're never thinking about how much they have at risk in their position, how big their position size is. And it doesn't hit them until it's too late and there's nothing that they can do about it. And this is why trade management is something that I coach a lot, because trade management is so important. If you don't have that skill, you shouldn't even be playing in this game. So you truly need to sit down if you're in this and think about, at what point will I cut my losses? And here's the thing about trading that people always forget. You can always get back in a trade. It's not the end of the world if you cut your losses, manage your risk, preserve your capital, and if the opportunity arises again later, have at it. Another tip is to think about why you're actually in this trade. Is it just because Roaring Kitty is in the trade? This has worked in the past, but there's no guarantee that this is going to work again. In fact, the price action today told a complete story of this. Price action selling off, giving back all of the gains, even during his live stream after hearing what he had to say, goes to show you that investors were not impressed. So you need to not think just because he's in this, it's going to work for him. He can have a loss too. He can end up, maybe he won't lose all of his money, but he was up a lot of money, hundreds of millions of dollars at one point, and the stock just cratered on him and gave it all back, right? If you truly believe that GameStop is going to have this massive turnaround and the valuation that they have today is low in comparison to where it's going in the future, okay, but have a thesis, have something that backs it. If you're going to trade just on YOLO, lotto for fun, understand that kind of speculation and make sure you manage your position size for that kind of speculation. And that leads me to managing position sizes. Managing position sizes is really important. You have to know what kind of trades or investments are high quality and what kind of trades are and investments are low quality. Whenever you're trading something that is high beta, aka high volatility like GameStop is, you probably aren't going to want to position size that the same as if you were trading something that didn't have that same type of volatility. You can lose your butt. Another tip, scaling. Use a scaling strategy. Scaling in and scaling out, it's a great strategy for traders to use to control what is going on and control that risk. Know when to take profit. This is the problem that a lot of people have had on every single pop that GME has had. They get greedy, they see it popping, they get greedy, they hold, they have the diamond hands, and then of course each pop just ends up flopping, right? But they get greedy when they see that green and they think that they're going to see more green, so they hold. So if you have gains, which, at this point, I don't really know how many people have gains, but some may. If you have gains, you want to look at the percentage gain that you're up. And this goes for anything, right? This goes for any kind of trade. When you're looking at percentage gains, it helps you gauge, hey, I'm up 200, 300, 400% compared to, the S&P 500 gains at 11% a year. I'm up asymmetrical gains, right? So maybe I should take some profits here. And again, back to that scaling strategy, you can take some profits out, take some of that risk away. So you need to be safe out there. Like I said, I'm not against people trading the markets. I am against people trading the markets blindly. I am against people blindly following people into trades and they don't know anything about the actual stock ticker, or they're not even looking at the fundamentals. They're not even paying any attention to the fundamentals. They're just being told that something's going to hit a pie in the sky price target and they just follow it blindly. And that's going to eventually beat you down in the end. Quite frankly, if we haven't already learned from this in the past, maybe we'll never learn. But here I am. I'm going to do my best to talk sense into people either way. And if you're trading before you're investing, you really need to get my book, Do This With Your Money, okay? Because you need to understand that you've got to lock in those long-term investments. Set yourself up before you start getting into trading the markets. I'll put a link to my book below. Stay out of trouble, and I'll see you next time.